Mic check. My bad. Oh, sorry about that. Um, okay, we're back. And looks like that one we took a loss. Here's my chart right there. Okay, so this one we've taken a loss. So what I'm gonna do is give it a second shot, right? Okay. Yeah, don't do this to me, my guy. Okay, sorry, my charge went off. So we lost that position because you know this market. So we can get in on another try, but this time the right way to do it would be we're gonna use half the risk. And I think I'm late because that would be a place where I would have loved to enter. So our position was engaged with this candle. And you can see initially we were in profits, right? So we saw up to 0.7 risk to reward ratio. So now we only have like 25 minutes to the end of this candle. That was, see how this started, and this was a strong move to the downside, but happens to be just a fake move. That happens, so it's okay. I can use, because I'm thinking they don't have to take that high again, but okay, let's give it a shot. I'm gonna do, yeah, we could be late actually we could be late, but let's give it a try. 2004, because we lost the first one, the second one is gonna be half the risk. This in my opinion is very what do I say, let's just do it, sell stop. This is low probability, high risk. This is a high risk trade. It can still work, but seeing that this is a high time frame level, this daily, let me make it a little bit dark, it's likely to be used as support for price to keep on going up. But this could also be like a manipulation to take. So anybody who was going short early has been taken out with this move, which, you know, I'm one of them. Anybody who was using this trend line, right? I think I'd said this earlier, and they're going long. They've been taken out, and then the market is now going to the upside. So this is why it feels like these people know where your stop loss is, because anybody trading trend lines, like let's say first touch, second touch, the third touch, there's people's strategy who when it touches the third time they're buying, which the entry was good, and then let's say they put their stop loss at this swing low and the market started going up, but look what these guys have done. They come, take you out, and then immediately they go to the other side. It's frustrating, but once you know what price does, if that happens to you, you just remain calm. You just tell yourself, this is one of those days. So let me hide that. We're going to review that later. In the meantime, let's see. So this has failed. No, I didn't draw it. So the first plan didn't go well because I was looking at something of the sort, and we did get our entry. So now let's try again. This time with half risk. Again, still looking for the same thing to happen. Go up, come back inside the range. At that low, we are trading. This can go above this high or it can fail. At that low is our entry, and so far the low is right here, right there. This is not very high probability because we do have a support area over there, but have we taken out that high? Yes, we've taken out this range. So if we lose this, we'll still have another chance of risking half of 0.5%, which will be 0.25%. If we lose that, then we are done for the day, and we only lose 1.75%. Once you understand that system, man, it's really good. So this is all I can lose, let's say in a trading session or in a day. Even if you are a bad trader, it will take you quite a while to lose 100%. It will take you a while to lose 100%. Where's that percentage? So once you lose 1.75, no more trading. Go study your mistakes, come back in the following day, and then start 1%. If you lose 0.5%, if you lose 0.25%, if you lose, done. No more trading. So I'm gonna give it another try. I do believe they're going to create another low that I'm going to use as my second entry. This is already set at as a 0.5%, so we'll just we'll just adjust those whatevers. Let's see how that closes. I don't like how we have these things over here. I know it's gonna be checking. Buy side liquidity. So that might be our entry. Very risky. Okay, these ones are forming a wedge-like pattern. Okay, that's good. We've taken out that right there. Waiting for this candle to close in the next 17 seconds. And maybe the 12:30 range can offer us our trade. So far, this is the first one, so this is the second one. Go up, come down, fail or whatever, and then shoot to the downside. But so far, this is what we have. So let's see if this works. So that's the new swing low right there, and that's gonna be a 0.5% entry. Let's see how that goes. Whoa, these guys still want to go up. Okay. So this is one of the challenges with this strategy, because sometimes it can keep on coming, it tags you and then it goes the other way, tags you, goes the other way. But once you have this system where this is all, as a beginner you want to lose, then it'll always be, your capital is going to be protected, right? Only 3 trades a day, 1%, the next trade half of 1%, and the next trade half of the 0.5%. You only lose 1.75% in a day, because there's sometimes the markets won't, will just do whatever. Okay, so we're still going up. I don't know if there's something I missed. There's really nothing. The only other area I see is now up here, but I don't think we'll get there. I like that rejection. Okay, let's see if this one will work, right? My stop loss should be way above the high, the highest high. Then sometimes you can play a little bit those levels, because you can just reduce it to that one, to the high of this candle. Well, believing that that's it. Now, I'm seeing a potential swing low forming here. If this candle closes green, then I'll bring my entry to that swing low over there. So already we're improving our risk reward, if I can say that. So far, this is how my next entry looks like, and I do believe we should be able to make our way down here. Today, I don't know. Let me see the 5 minutes, see if we have a new whatever. So we do have this gap here, right? That's how. So this was the original one, and then we did come inside a little bit. So I'm going to update to over there, and the second position has been engaged. I think this one is going to work. Let's see how that goes. So this candle is the one that has engaged us. My stop loss is above that candle, and I do think we should be able to get up to here, which is way more than 2%. So let me get rid of this box. Actually, let it just stay. So that's good. The first trade we lost, let me see, account history, we lost 47.20. I mean, it's still 1%. This is likely to work. And my formation, not that one, but this one, see, something of the sort. So we kind of, envision what we want to see before it happens. So this right here would be this high, and then this low would be this low, and then this high would be this high. So let's see if this works. It's likely going to work, and I'm betting it on, let me see, that should be able to give us our money back. I like what I'm seeing. So to make it go back to a full percent, I can reduce this risk by half, because I don't think it's going to be coming back up here, and then I can do the other 0.5% up. But let me just chill. So I'm gonna be taking a huge chunk. Let me move my TP to down here, and then I'm gonna be taking like a huge chunk over here. So I'm gonna set a buy limit and just sell like 100 units and buy back 100 units of the 153 that I'm selling. So let's see how that goes, and we can reduce today's damage. And let's see how this goes. Bruh, you're missing. Grab your missing. Where you at? So we've now seen at least 1:1, right? Now, what I do is I usually reduce my risk by half, right? Because I've already seen 1:1. Now, when I get to 1.5, then I break even, right? I'm not gonna be taking any loss. So I have a tool that helps me with that. My stop loss is right there. Once we get to 1:1, I'm breaking even. And then my full TP should be over here. But I don't think we'll get to this zone. That right there is not. Another thing we can do is from there to that high, at least to 2, whatever. We're about to get to 1.5, and then I'm gonna break even, because I don't believe right there, break even. So now risk has been removed in this trade. If they do come up, then we're likely to make 163. And there we go. We're in the money, looking at 3,200. Let me put that down a little bit. So risk free, and it should be break even. But let me just put this stop loss in here. We should be able to take this low. Now, at that 1:2, according to my plan, is where, you know, take out 80%. That's the best thing to do. So that right there is a winner. So if we were risking 1%, could now be seeing 1. So there we go, guys. 1:2. That's where you finish your trade and you're done for the day. So we lost 1% and we've made 1%. So that's break even for the day, which is good, right? So, ooh, beautiful. Jesus Christ. So I've taken out 80%. No, I don't know what that was, but I had, let me see, 34.65, which is good. So I'm gonna leave a runner in there, and I'm not gonna break even this position. I don't think I want to take a loss. And ooh, fire, baby. That was a good win. So we've made back a little bit, and we still have a small position running. Now I think we are likely to keep on going down, and I'm going to take another half. Wow, this is beautiful. Let's just go back here. Ooh, Jesus. Ooh, hallelujah, glory. All day, every day. Okay, I'm gonna close a half. So let's say 53, a half is 20. Let's do 26. So that is 3,400. Still, we haven't made back what we lost initially, but we've reduced our risk for the day. And then now I can leave a runner to do the rest. So my stop loss is now inside, so no risk involved. If they do come up, then we can make an extra $100, but I'm betting on this thing to keep on going down to at least half of the previous 4-hour range and done for the day. So it's now 12:50 p.m. After 1 p.m. the market will tend to be a little bit slow. So that's kind of how you can protect your whatever, your capital. But honestly, I was just being nice because I have some people watch. Otherwise, I keep on taking 1% trades. But you know, it's good to, if you lose 1% on the first entry, The second entry you want to do on 0.5%. If you do lose again, the third entry you want it to be 0.5%. And if you really have to keep on going, you now just take 0.25% trades. This is a total of 2%. Once you lose 4 times, just leave it alone, right? That's it, because sometimes the market will just do whatever. So we're now looking at an RR of 1:4.2. If I bring in the executions, okay, don't make sense right now. And now this is where I think, so this is already, we don't need that anymore because the market has gone through. This right here is where we can see the market stop, and maybe we can see the open price of that candle. So what I'm going to do is I might just spare myself a little bit, because wow, look at that drop. Oof. Nuts. We're now looking at 1:5.12. It's just nuts. But let me get rid of that. I think that's it. Let me pay myself a little bit more. I'm gonna take, like, let's say a half. What is a half of 27? 14, 28. Let's do 14. So if I've taken a little bit more, so this should give us back what we lost. 3, 4, and actually we've made something on top. Our beginning balance was 410, 218, and now we are at 410, 877, and this baby is still going down. I'm going to hold on this until half of this previous 4-hour range, and I think that'll be okay. So I think I'm good for the day, and that's just how my strategy is. Simple, calculated. Wait for your entry to happen, engage, let the market work for you. If it doesn't work, the stop loss is right there, do its job. And let me just do this. My final TP is gonna be just here, and I'm out. Right there. Well, let me do something. Let me just take out, like, trade, create new order, and this the 2 units buy limit over there. No, wait a minute, don't take me out yet. Right there, no, at 2, right there. Wow, that would have been a crazy and then get it done with at the half of this previous 4-hour range. Man, we're still going down. Ooh, that was a banger entry. Banga. Short position. So let's go back to the 1 minute. So this happened perfectly. We'll go through it in a minute. We're now looking at 1:6 R. My God, what an entry. Nuts. Boom, boom. The first one failed, the second one happened beautifully. So we've gone through this gap right here, which I thought that, you know, the market would come and then go back up. Now, because we've gone through it, then we want to see if the market's gonna come, use it as what, resistance to keep on going down, right? But at this point, we really don't care what the market will do. We've gone in, made our bread, and that's it. So this is just a small runner. running in there. Remember our initial position was like 153 units, and we paid ourselves a little bit by little, made back the loss, and we have, so this was the beginning position beginning whatever price or amount for 10 to 18, and now the equity balance is for 10,877. So that's like 600 uh 600 profit for the day. In terms of percentage, that would be, it's not too much, but the most important thing is we are, today is kind of a break even day, and that's it. So let's do a quick review and then we're done with the stream. Oh my guys, we're at Thao, and then again it's 1 p.m. in Kenya. No, it's 12. It's 1 p.m. so it's kind of late. No, it's going to 12. It's not that late. So why did it stop? Why is it stopping there? Okay, at this 15 down candle where we saw the market shoot up. If you guys can remember what I told you about, why is that there? That's the 5 minute. About the daily, what I did on the daily, right? Noting where the down candle is, and then where we see this rise going up, the market will tend to come back to that area. So, and that is what we're seeing right now. Oh, taking notes. It's showing that I'm the only one in the chat. It's only showing one person, but yeah, I'm glad you're there. Anyway, that's it. Keep it simple. Wait for that signature, and that's it. So tomorrow we come back, waiting to see. It's a I mean, soon it's going to be a real account. Soon it's going to be a real account, but for now it's demo. It's a demo account. I mean, you have to be comfortable taking trades on a demo account, and then you slowly graduate. So this is a 15-minute order block. Yo, 15 soon I'll be. Yeah, my guy. Wow, look at that rejection. So man, that trade was good. Anyway, where's my final TP? Why did I have those low position orders? Okay, this is okay. This 5 minute, the market has gone down and up, so it's balanced. So this gap no longer exists. If I can, it's no longer usable. Can they still use it? Yeah, I mean, we can leave it there to see, yo, if the market is going to use it as, like, come back up to use it as support, but I don't need it. This was that high time frame daily level, and now we are, look at the 15 minute. This down candle is now what we are working with, right? So time is up. It's now 1 p.m. in New York. That is 4 p.m. and that is kind of where those guys now, they're closing the market. They're closing their day to go home. So New York, it's what, 4 p.m. in New York. So they're closing up, and usually we'll see the market kind of slowing down, but sometimes there's still going to be volatility, because now this is the last hour of trading from 4 to 5 p.m. New York time, and Nairobi, that is 12 to 1 p.m. is the last hour of trading. it can still be volatile where we see movements, but most of the time it just, you know, slips. And guys, we're done. That was a good trade. So today the trade was from 11:30 p.m. Now let's do a recap, right, of what we were expecting. So the first thing is I do start my analysis on the monthly time frame just to see where we are on a large scale, and then I'll go to the weekly, make sure my levels are in there, right? So I'm looking for, like, you know, previous week highs. The market loves to run them, and such as these candles, where this was the last up candle before this decline, the market likes to go back to that area. The same thing on the daily. You know, I can see that this day we were so bullish, so I was looking for a retracement back, kind of like how you see on these most candles. Went up there, no, this one traded to up there and then comes and closes, trades up there, comes and closes. So with trading from 11 p.m. is us trying to see if we can get that decline to the downside, and if we were bearish, we want to see that incline to the upside, and then go the way down to 5 minutes, see if we have any close gaps where the market can mostly come back to, and then after that, make sure you know where the previous 4-hour range is. If we are above it, you want to sell. If we're below, you want to buy. That's kind of a good rule of thumb. And then I go to the 1 minute to look for my entries, right? And what I'll do is I wait for the market. If I believe that we're now going to be selling, like how we tried here, I wait for the market to come above the this previous range. I wait for my low. Once we cross that low, I'm in. This one didn't work out. This one worked out. The first trade, you risk 1%. If that fails, the next trade you want to risk a half of that, of what you risked before. So if you keep on losing, you don't lose so much, right? If that one failed, I risk half of it. So in 3 losses, I'm only losing 1.75% instead of losing 3, because you're going losing, risking the same amount. That will help you to preserve your account on the days where the market is just against you. So if I can take this market back, let me hide this. Let's say, what time did we start trading? That was way before 10:59, right? Now, number one, we are above the previous 4-hour range, so I'm expecting a reversal. It doesn't always happen like that, but it's high odds. Now, the next thing, this is 10:30 to 11 p.m. range. It has closed. Now I want us to come in here, take that high, and then come back inside the range. And then it's even good if there's a high time frame level, right? So market came up, we took out the high. Now that low is where I framed my entry, like that, and my stop loss just above the high, and came in, boom, boom, boom. Now we formed another swing low, so that's my entry, my stop loss above whatever high they'll create, and that one tagged us in. This is one of the disadvantages of this strategy, because sometimes they can tag you in and then go and check you out, but it's all good. The stop loss is right there to do its job. And then this is kind of where my monitor went off, my computer went off. So coming back, this guys, so you can see we were in profits for a minute over there, and then unfortunately we lost that trade, which is okay, right? We're anticipating for a loss. That's why we have our stop loss there to this job. Now 1% gone, so the next risk is gonna be half of that, right? But once you kind of get to know whatever it is, you can keep on risking the same amount, but that's a good practice. So there again, we do have a new range. We're still bearish. We're waiting for the same thing. Take out the high, come back inside of this range, wait for a swing low, which they've already created for us. That's gonna be our entry. So we've taken the high, but just a little bit, because this has turned red, right? I mean, even if you whatever zoom in, we've taken out the high. So the latest swing low is this one right here. Our stop is gonna be above the highest high, and then we shoot down. Now they created another swing low, so that's now going to be our entry, right? And then as entry, whatever stop loss is at the highest high that they leave, and just like that, this entry was triggered over there, right? Now ideally you want to take 1:2. That's the rule of thumb with this strategy to be safe. Then again, I had a feeling that on this 5-minute fair value gap here, or this gap, we're most likely to get to that zone. And then we do have another one here, so you also want to note that, because what happens is so we did enter in that gap a little bit and then trade it up, so we can adjust to right there. Now what happens with these gaps is the market can get to that spot and shoot the other way. So what you want is to see you have at least 1:2 before there. So 1:2 is way above there, right? But you know, that's the rule of thumb. But from looking at the markets for quite a while, then I noticed that this is high likely to be the high of the day. Then you can anticipate for the market to go down a little bit more, right? But once you do 1:2, then you want to reduce your risk by half. Now, how I manage my trades is, once I'm triggered and the market is going my way, I have this measuring tool here, this fib, that has these measurements where I'll begin from my trade entry to where my stop loss is. Now once we get to 1:1, let me show you. We're 1:1, I reduce my risk by half. Once we get to 1.5 like we did over there, I reduce my risk completely. So if we come up, if the market turns around, I'm not taking any loss. Because what I've seen from, you know, looking at a lot of examples, once we get to 1.5, it's not supposed to retrace, it's supposed to keep on going down. And if it does retrace, there's a higher probability that it will keep on going the other direction. And then right there, before it gets to 1:2, they had this push to the downside, and you're done for the you're done with the trade, right? But you know, if you think the market can keep on going down, you can hold on a little bit more. And as you can see, this trade has ended up giving us a risk to reward ratio of, let me change that to style, stop loss. Yo, my guy, 35 230. Okay, the stop, what am I doing? Stop was way above here, right? So we've seen a risk to reward ratio of 6%. That is good. So because I took that 1% loss first, whenever I'm in a winning trade, my aim is to get back this loss, not even to make money. I want to get back my loss. So I do start paying myself back, just taking partials, and then I leave a runner. So if you add this up, it's way more than this. And then I do have a small runner running. If they do keep on coming down, then we can make an extra 0.42%. Well, I didn't know this thing calculates for us. As you can see, it's saying take profit, that will be 0.42% of the trade. And that's it. Tomorrow we come back and we look for the same thing over and over every day. If you don't see that signature, we don't engage. We don't chase the market, we wait for the market to come to our levels. And I believe with that, in due time, it should be profitable. So if I can try see if I can put this strategy together. This alone is the entry criteria. This only covers how to enter, and then it covers your trade management and the loss management. And then I will also write this down, which is super simple. So if you have any questions, please let me know. Reach out to me anytime and I'll be glad to assist. But otherwise, keep it simple, go in, get out super hella fast. Now, this is the 1 minute time frame. If we go to a daily time frame, I bet you we still have the same entry types, only because it's the daily. It takes you a long time, right? Let me see an example. For example, this one right here, you trade above this high and then at this low is your entry. But then this means you'd have entered on Tuesday, on a Tuesday. Then by the time you get in 1:2, it's gonna be, so this was the 23rd. You kind of stay for, so what is this? Feb 23rd. No, 21st Feb, and you stay up until 10th March for you to get 1:2. Or you can just go to the 1 minute time frame and wait for that same setup, and you're in and out in minutes. Yeah. Otherwise, that's it. I'm gonna close the stream here, and we can meet again tomorrow at 11 p.m. PST, which your time is Nairobi. It's gonna be, I believe, 10 p.m. 10 p.m. PST. EST. Please like the stream and comment, say something, and reach out to me on WhatsApp if you have my number. Otherwise, I'm done. Trader Mawera, and I'll see you again tomorrow. So, I'm thinking of purchasing. Anyway, we'll talk about that someday. Guys, I'm out. Bye bye.